Cool. Great to be here. My name is Phil Wildman. I set up GG Insurance a little while ago. So we've been doing this in the video game space for about 7 or 8 years now. I've been in insurance for 20 years. Been playing games since I was 3 or 4 years old. Super passionate about the video game industry. Love being able to sort of support it by doing this weird niche little thing with insurance. But yeah, it's great. We get to look behind the scenes of so many companies that I love and have grown up playing their games, and get to see certain deals happen that we wouldn't have otherwise got to be privy to. So yeah, I'm going to talk to you guys today a little bit about mergers and acquisitions insurance.
Which sounds terrifying. I think even just the idea of mergers and acquisitions is mildly terrifying.
Yeah, I just it doesn't need to be. It doesn't need to be.
Okay.
You know, it's fear of the unknown. Not understanding how insurance works is often what people, you know, drives them away from it. They don't understand it. It's this like big, expensive, mysterious thing, and I don't know. It's a lot of money for something I don't understand. Nobody wants to spend money on something they don't understand.
It's true.
And mergers and acquisitions insurance is probably one of the most expensive types of insurance out there. We're talking potentially hundreds of thousands of dollars in premiums, if not more, can be into the millions for some of these deals. However, yes, some of these transactions in the games industry, they can be in the tens of millions, hundreds of millions of dollars. And if M&A insurance can help get a deal over the line, I don't want to say, oh, what's a couple of $1 million just to get that deal done. Yeah, that's.
But it can actually help the deal go through, is what you're kind of saying.
Yeah.
Okay.
And the reason that the insurance is priced the way it is not because insurers are trying to price gouge and trying to get as much money as they can. It's because they do pay out. They do pay out a lot on claims, and for M&A deals, the payouts can be astronomically high.
Oh, yeah.
So mergers and acquisitions insurance. Generally, this is purchased by the buyers. So this would be, let's say I'm purchasing a games company or a particular IP. In the due diligence process. So the due diligence is effectively we've done a sort of like a pitch deck of what we're buying, what we're doing. These are all the risks. This is everything that we've identified. So it's kind of like this is what you're buying.
Yeah.
And the M&A insurance will cover the unknown unknowns. So anything that kind of, let's say after the sale, anything that comes out of the woodwork afterwards, there could be like an IP dispute that wasn't really crystallized yet, or there was some problem with a previous shareholder, or let's say you're buying a studio with a fairly wide or broad portfolio of games or older games where post-acquisition, maybe if the acquisition was well publicized, one of the original artists from the game comes out of the woodwork and they were like, oh, hey, actually, here's this old contract I found up in the attic that says I own 20% of the royalties from this game, or all sorts of weird scenarios like that. That can come out after post-sale, so it wouldn't be picked up in the due diligence. So these are like your unknown unknowns. So depending on how the buyers assess the risk of the company they're buying, they might feel like, well, this company's worth, I'll make up figures. So say this company's worth 10 mil. But the sellers say, no, we've spoken to our consultants and they say it's worth 15 mil. Yeah. So we want an extra 5 there. And the buyer's like, well, I'm not sure. We're worried that something's going to happen here. There's like a big portfolio of games. There's all this legacy stuff. Like, we just don't know. How about this? What if we purchase some insurance to make sure everybody's comfortable with the price, and we can then get to a sort of a meeting in the middle, and then they'll feel comfortable that if something did come out of the woodwork later, there's enough insurance in place to cover. They can be covered. I mean, there's tons of nuance to this. It's a pretty deep topic, and we're not going to have time to go into the full details today. But that's, in short, effectively how it works. Now, it goes by a few different names. Mergers and acquisitions insurance is generally the overall term. In the US, it's generally known as reps and warranties, representations and warranties. In the UK, it's referred to as warranty and indemnity insurance. There is some nuance between the two. They're not exactly interchangeable, but it's mostly regional stuff.
Okay.
Sometimes called transaction liability insurance. So yeah, lots of different words for similar things there.
So many different names. Everything's got multiple names.
Right, yeah. So the key thing though is it's for the unknown unknowns. The reason I keep mentioning that is there's another type of insurance called contingency insurance that is super relevant to M&A deals. So if there is an identified risk, so if there's something in the due diligence that is like, hey, we actually know we have a problem. Like we have ongoing litigation. There could be, which is very common, especially some of the bigger deals. These big studios, they might have, sometimes multiple ongoing lawsuits. Right. So how do you buy a company that has multiple, ongoing litigation with open-ended results, open-ended settlement figures?
Yeah.
So if I was so Parker, if you had a company that I was going to buy, but you were being sued for an undisclosed sum, we don't know what it is yet. It could be a $10 million loss, or it could be nothing. It could just go away. How can I possibly buy that? And normal W&I reps and warranties insurance won't cover that because they'll say, well, no, we don't know either. We're not going to cover that. It's a non-identified risk. So you're then into the contingency insurance market where the contingency insurers will basically play detective and they will look at all the circumstances of this and they'll say, okay, what exactly are you being sued for? What is going on? And they will try and come up with a price to say, okay, you're being sued for somewhere between nothing and $10 million. And what is the chance of that actually happening? And they will say, okay, we're willing to take that risk instead. So we will charge you, if it was a low chance of winning, losing money, they would say, okay, we'll charge you $1 million for this. And you pay $1 million and that risk is then just taken by insurance. So if I was buying your company, I could be like, okay, for $1 million, I don't have to worry about this. The insurance will take care of it.
The insurance will work.
Super powerful tool, but it's expensive. It's really expensive. So it's like $1 million on an insurance policy, but it means you get price certainty then. It means that if you're doing a transaction, you know that $1 million is what you're going to pay. It's not going to be 0 or 10, or you just don't know. That's just, you've crystallized the price there. So that is a super powerful tool. It's definitely underutilized. I'm not sure many people are even aware that that's a product.
Probably not. Although that's I think just being the detective in this and figuring out, okay, what's the likelihood? What's the likelihood of this working out a certain way? That would be so interesting too. But price guarantee is really what it is. So you know exactly you know exactly what you're buying in that sense. Like you really don't know the outcome, but you've made a decision and it's going to be that. So
absolutely. But there's not many insurers that even offer this, and the ones that understand the games industry are even fewer. Because as you can understand, how would you go to an insurer that doesn't know much about the video game industry to unpick and unpack some retro video game license from 20 years ago that was, they really need to know what they were doing and understand the nuances of how that applies in the current landscape and so on. So very, very few companies that offer this, super specialist, but super interesting. So tax insurance is basically, let's say I've bought a company and it's a gray area as to how much tax I'm supposed to pay.
Okay.
And this could be like millions of dollars in difference. And you've got your tax accountants in America are disagreeing with your tax accountants in the Cayman Islands. And there's like some law that's could be interpreted either way, and it's the difference between you need to pay $1 million in tax or nothing. So the insurers basically take a view on it, and the transaction will go through, and you basically sit and wait and see if we're going to get called in by the IRS. Hopefully not.
This feels like very high level gambling in a lot of ways.
Insurance has been called posh gambling before.
Feeling like it, okay.
It is risk. However, there's a key difference between gambling and insurance. In gambling, the house always wins. In insurance, the insurers do not always win. A lot of the time, they'll lose money on stuff.
Okay.
People assume, oh, these insurers, they always make money, they're always there to make profit. Actually, that's not the case. So an insurer in 2015, they went into the video game market hard, and they're like, hey, this market is blowing up. We want to insure everything. They completely underestimated the risks of the industry, and they were charging way too little for it. And it was an absolute bonanza. They insured tons and tons of stuff, and they got hit by a string of claims for rights of privacy. So it was two claims in a row, both of which very similar circumstances. The short version is it was a video game that had real life buildings and locations in the background, but they didn't have permission to use those buildings. So they got sued, and there were two what we would call total losses. So the insurance policy was for £5 million. They had two claims, both of which went beyond 5 million, but the policy only paid 5. Yeah. So that insurer basically lost £10 million in 1 year, and they'd only taken in a couple $100,000 in insurance premiums. So that particular insurer has basically, as a rule, said, we are not touching the video game industry ever again. And a lot of other insurers were kind of watching this all unfold, and that's one of the reasons that so many insurers don't like the games industry, because they're like, this is complicated, and we're not really sure we know what we're doing, and the potential to get this wrong is super high. So they will tend to not cover